What's going on? What's going on, team? Welcome back to another week. Welcome back to the channel. Welcome back to another Money Monday. What we're going to do, the first thing we usually do is we talk about previous stocks that we talked about last week, how they performed. Then we're going to talk about the S&P 500 and the Nasdaq. And then we're also going to throw out what the next opportunities are. We're going to be talking about 10 of them. And before we jump into those opportunities, we're going to talk about Tesla and DWAC, the two big movers this last week, and kind of what our predictions are or what we see from a technical standpoint and why we think that they're actually going to be dropping. So let's go ahead and jump into the first thing that we're going to do is we're going to talk about those that performed last week. So last week we talked about Tesla and that gained 7.8%. So last week on Sunday, we talked about Tesla and it gained 7.8%. Just today on Monday, it gained another 13%. And we're going to talk about why we believe that it's actually going to drop. So we were predicting those two pumps or the two rallies that we saw. And now we're actually thinking that it's actually going to be dropping down. And we're going to show you on the charts why we believe that those are actually going to drop from a technical standpoint. The next one we talked about was Roku. That one gained 8.27%. The next one we talked about was Baba. That gained 7.13%. We talked about Coin, COIN. That gained 14.34%. We talked about DKNG. That one was a small gainer. That gained 2.2%. We also talked about GOL as a potential short play, and that actually dropped 15.69. So that was a great short for those that took advantage of it. What else did we talk about? We talked about BYND, that gained 3%. And then we also talked about Microsoft, that gained 2.21%. We talked about Shopify as well, that gained 5.27%. And then we also talked about MELI, that gained 4.1%. We talked about a few other ones. You guys can check those out. I'm going to link the video right up here. So you can check out last week's stock talk, and that's just how it performed after we made the stock talk. So it pays to listen to these stock talks. If you're not subscribed, make sure to subscribe. If you get any value out of this video, make sure to smash that like button, share this with a friend. That way they can make some money, you can make some money. It helps out the channel, it helps out the algorithm, and it might also save you from making some costly mistakes as well as your friends. So before we jump into the SPY and before we jump into the Nasdaq and the opportunities, let's talk about Tesla and let's talk about DWAC, DWAC. So let's talk about Tesla first, TSLA. So this one here, we finally broke the $900 resistance level that we saw up here. And the reason we had a resistance, let's go to the daily chart. That way you guys can see the big picture of this. The reason we had that $900 resistance level is because we actually approached it right up here back in January. And so that was a resistance. So when we approached it, we weren't sure if we were going to get rejected or if we were going to break through. And if we did, and if we would have gotten, or if we would have broken through, obviously we're going to have a significant rally. So that's the first thing. That's just a psychological level that people were expecting and waiting for. And when it happens, people just get super excited about it. We're obviously seeing an increase in volume. Obviously, earnings, was a positive catalyst on Tesla. And so obviously with that combination of things happening, we saw that rally happen, right? So that's kind of the upside to it, right? Now let's talk about the downside. So we're going to stick to looking at this on a daily for two reasons. We're going to talk about the standard deviation. We're also going to talk about gaps, right? So the first thing we're going to talk about is the standard deviation. So this yellow line right down here, that is the mean line, the zero line, right? And then we got +1 standard deviation, +2 standard deviation, +3 standard deviation. So we're now above +2 standard deviation, and we don't stay above +2 or below -2 for too long, right? And as we approach +3 or -3, we stay there significantly less, meaning that it usually drops when we reach that point, right? No matter what, it's just statistics, right? And so we already broke that +2 level, and it looks like we're attempting to reach that +3 level, but we are starting to see this wick. So if we do see a rally, which I don't believe we will continue to see this rally, but if we do, I anticipate this reaching that +3 level at 10 or 1,094, and that's possibly where we're going to get rejected, or we're getting rejected already just because we're seeing this wick right here. So this wick, it's obviously not indicating a positive thing, right? It's indicating potential weakness and pressure, selling pressure from the top, right? And so that's why we see it pump up and then all the way to 10:45. And then we ended up dropping and closing here at 10:24 on Monday. So that's the first thing, or that's the two things right there, right? So we got the wick. We also have the standard deviation that is indicating that we're potentially going to drop. We also see this gap right here. So from this level right here, 910 all the way up until 946, we have this gap, right? And what happens when we see gaps on the daily chart is they tend to get filled, right? Meaning that usually the price will come down to fill that before it continues higher, right? So even if we do continue higher, we're usually going to come down, fill this gap, and then continue higher. And if we don't do that, we're probably going to just drop, right? So that's the first thing that you guys should be paying attention to. The second thing that we want to talk about, or now it's like the third or fourth thing that we're going to be talking about, is we're talking about the RSI, right? So we're very, very overbought on the RSI. So if you're not in Tesla, personally, I'm not going to be jumping into Tesla at these price points, right? If I was somebody that was not involved with Tesla already, right? So I'm not going to be jumping in when I'm seeing all these red flags, right? So we're super, super overbought on the RSI. The MACD, it looks like we're still heading to the upside. So like I said, we might potentially reach that +3 standard deviation. I don't, even if we do, I'm not going to be trying to catch that last few dollars that is going to move to potentially lose a significant amount, right? So when you're looking at the upside, also look at the downside, right? So, the MACD is not too helpful for me right here in this current situation. I'm focusing more on the RSI, the gap, and the standard deviations that we're looking at. So that's kind of the target right here. On the long side, as I would be expecting that 1098 if we even hit that. But like I said, we're already at +2, and that's usually, a level that would get rejected at just from a statistical standpoint, right? So I would anticipate that we drop all the way to at least 910 to fill this gap. And that would also fairly well line up with our resistance level of 900. So I wouldn't be surprised for us to come down to 900, retest that, and then continue higher if we do start pushing higher. That's on the long side. On the short side, we can very, very well drop all the way down to the 688 level for multiple reasons. So the first reason is going to be, let's go ahead and zoom out. That way you guys can kind of see. The first reason is going to be because that is a critical volume profile level. The second reason is that's also the 180-day and 200-day moving average. So we'd come down and retest that. It doesn't quite line up with the resistance level or support level down here at 752. However, if it does come down, it would line up with this 700 level, which does somewhat line up with all of these resistance levels down here. So where we kept on getting rejected by that mean line. So that's what I'm looking at with Tesla. That's what I'm seeing. Obviously, make your own decisions. That's just from a technical standpoint, what I can break down to you. So if you're not in it, I would be very cautious about jumping in at these price levels, because you potentially have the potential to lose some significant money if it starts dropping and you jump in at 1,024, right? So I'd really wait for this pullback to happen to really grab some if you're trying to catch that next wave up. However, I'm going to be personally looking at the short side. And then once we, obviously find support, I'd be looking to re-enter for the long side back to the upside. So that's what I'm seeing with Tesla. Very similar, not similar setup, but very similar points here with DWAC. This was a SPAC that rallied all the way to 175. So on the daily, we're going to talk about a few things, right? So remember, we were talking about Tesla and how it's approaching that +2, +3 standard deviation level. So when we're looking at DWAC, we actually approached that +3 level, right? So with Tesla, we just barely broke that +2. And so we're halfway up to +3. Here, we broke up to +3. And that's actually where that candle ends, right? That daily candle ends. And then we ended up getting rejected. And now we're coming down. We're almost at +1. So as you can see, these standard deviation levels are very important, and they're very beneficial for you to pay attention to. We probably made our way up to like +4 right here on the wick, but that happened really, really quick, and we came right back down. And that candle, like I said, closed at that +3 level, right? And we don't stay at these levels for too long. So that's why I know that it's going to get rejected, and it did get rejected, and it continued to drop. So we talked about that with the team. For anybody that was on the team in the academy, the link is going to be down below if you haven't joined and you want to join. We talk about how to identify this. I teach you step by step how to apply all of this technical analysis to do these technical analysis breakdowns for yourself so that you can identify great buying and selling opportunities. But we actually talked about DWAC on the team. And we were talking about the fact that it's going to get rejected and it's going to start dropping. And that's exactly what happened. And we're just looking at this on a daily chart. And once again, same thing that happened with, or that we're seeing with Tesla, we actually saw this with DWAC, is we see this gap right here from 45 all the way up until we opened up right here on the candle 92, right? So as on the downside, we're expecting this to come down to at least that 45 level, which would align with this mean line, right? I'm not saying you can't go lower, which it can very much go, it can very possibly go lower, but at the very least, I'm expecting this to come down to 45. Another few things that I want you to pay attention to, obviously the RSI curving to the downside, starting to head to the downside. Stuff like this. So DWAC, obviously, if you got in at like $9, then, you know, you capitalized and you locked in some, hopefully you locked in some great gains. But if you're seeing something like this on a daily chart, or you hear about a stock and you open up the technical chart and you see setup like this with no previous data, and you see this massive spike, right? Obviously there's manipulation there, or there's just a lot of hype, right? It's not very sustainable for something that was $9.84 to now be worth $175 in the span of a few days, right? So don't be jumping in at $120 or $160 and thinking that it's going to continue to head up to the upside, right? So if you're paying attention, if you learn these technical indicators, you'd be paying attention to the fact that you have these standard deviation levels, and that's exactly where we're getting rejected at. So similar, you know, like I said, we're definitely at least filling this gap. That's for sure. We have the critical volume profile level all the way down here at $12. So I wouldn't be surprised to see this drop all the way to $12. All in all, if you're going to be looking at this, definitely be considering the short side, to play the short side rather than the long side, at least in my opinion. Obviously, we had that initial spike in volume. Now we don't have so much volume, and it's red. So we're obviously dropping and selling off. And this is probably going to continue to. So that's what's happening with Tesla and DWAC. And now let's go ahead and jump into the SPY, the S&P 500, talk about that, where we're at. Talk about the Nasdaq, and then we're going to talk about 10 opportunities that you guys need to be paying attention to throughout this week that have some great plays to the long side, right? Not setups like that you just saw, but setups that are actually have a very high probability of playing out. And I'll tell you exactly why, for technical reasons as well. Another thing I forgot to mention on DWAC is DWAC is when you are trying to short, unless you are able to locate shares to short, you're not able to, right? Meaning another thing benefiting the short side and guaranteeing or confirming that, you know, it's probably going to sell off is the fact that there's not enough shares to short, meaning that you can't even sell it, right? And usually that indicates that a stock is going to start dropping just because there's so much short interest involved, short interest in that particular stock. So let's go ahead and jump into the S&P 500. We got the S&P 500 pulled up here. We are on the daily chart here on the S&P 500. Let's go to the 4-hour chart. That way you guys can see a little bit more data, a little more data and a little bit more detail, right? So we do this every single week. We talk about this. Once again, you can refer to that video that I told you about that I linked earlier in this video right up here. And you can go back to the channel and look over the last 2 or 3 weeks that we did these weekly stock talks and these Money Mondays. When we did see this pullback happen and this sell-off happen, we actually talked about this inverse head and shoulder, right? So we saw the shoulder, head, shoulder, and we were talking about this, that it's actually going to start rallying to the upside. And that's exactly what we saw. We saw the head, or we saw the shoulder, we saw the head, we saw another shoulder, and then boom, we saw this rally happen. And we broke right into this channel that we've been trading in basically since January of this year. If we zoom out completely, it goes down all the way back to January. So now we're back in this channel, which indicates a few things for us, right? So the first thing we want to pay attention to is we're actually fairly overbought here on the RSI, right? So that's, you know, potentially concerning. In my opinion, I would say that we have a high probability of pulling back to this bottom channel trend line that we got back into. Now it's going to act as a support, which also aligns with this 50-day moving average, this purple line, right? So if we do find support, we're going to start holding support here on the 50-day moving average. We just do not have enough demand at these levels yet, right? So this is actually a resistance level that we were at previously, and we're currently at basically all-time highs here. If we do create this support or this resistance level, and we did just barely break above it. So that also aligns with the mean line, which also acts as a level, right? So we're potentially going to get rejected here, which would kind of seem like we might be. RSI is obviously overbought. We have been overbought for some time. So I'm not going to say that we're going to definitely drop like in the next day or two, but very high probability that we're going to correct at least to the bottom channel trend line and then potentially make higher highs. We need some form of confirmation, right? Because we've just been pushing and pushing. So we need a little bit of a relief here in the market before we continue higher, because we can't just keep pushing indefinitely, right? So I'm expecting it to at least come down to this bottom channel trend line, find support here at around 450, and then potentially head up to new highs, right? Because we're currently at those all-time highs right now. So that's what I'm watching here with the SPY. As I mentioned, we talked about this happening. So if you guys watched the videos and you guys were prepared, you were able to take advantage of this opportunity. The Nasdaq's doing just the same, basically the same exact setup here. We ended up seeing the exact same thing play out, right? So we saw this come down here. We saw the channel, or we saw the shoulder, we saw the head, we saw another shoulder, and then we saw this rally happen. So basically the same thing's happening with the Nasdaq. So if you guys are paying attention, see, shoulder, head, shoulder, boom, rally. We're not quite at those all-time highs yet on the Nasdaq. However, I do anticipate we're going to get there, but we're basically probably just going to follow the SPY and the Nasdaq are basically going to follow hand in hand with each other. So just pay attention. If you want to make it super easy on yourself, pay attention to the SPY, SPY. That's going to be a very good indicator for you as to what's happening with the overall market. So that's what I would recommend, and that's what I would advise. The first opportunity, let's go ahead and not waste any time. If you guys are enjoying the video so far, make sure to smash that like button. If you're not subscribed, subscribe. I know a lot of you guys that watch the video aren't subscribed yet, and that's just going to benefit not just you, but it's also going to help the algorithm. It's going to push this video out to more people, and they're going to be able to also gain this information and be a little bit more educated when they're investing in the stock market. That way they don't make costly mistakes, and they can also, make money if they take advantage of, learning this material and paying attention to the videos and what we talk about. So the first thing that we're going to be talking about, or the first stock that we're going to talk about, is going to be AA. So this one here, the first thing, this is Alcoa Corporation. So this one here that we've been paying attention to has been trending very consistently, right? We've seen this continuously hold this 180-day, 200-day moving average line, continuously bounce off of this level. And what we're seeing here, we saw a massive drop after earnings. Basically a day or two right after earnings, we saw this drop happen down to the same level that we keep on getting support at, which is the 180-day and 200-day moving average. It also aligns with the mean, which is this yellow line on the standard deviation level. So that gives us an idea that this might potentially be a support level, right? For those two reasons, right? The next thing that we're going to be looking at is we were in those oversold territories just on Friday, right? So today we finally got some confirmation. Once we zoom in, I'll show you that. But today we finally saw confirmation. MACD, obviously we finally made that curve and we're starting to head up to the upside. So those two are looking very good. The levels are looking very good, and we're obviously at a fairly significant support level. So now that we're going to do that, let's go ahead and zoom in and talk about why there's confirmation on this bounce on Monday. So we finally found that bounce on the 180-day level, which is where we tend to bounce on this particular stock. And we broke above this EMA, which is this blue line. Once we break above this line, you tend to see a rally, right? Every time we break above the line, we see a rally. Break above the line, we see a rally. We're breaking above the EMA line, and we're anticipating a potential rally. The first level I'd obviously be watching is going to be this level right over here at $58, which is not only a previous high, but it's also the +1 standard deviation level, which tends to act as a form of resistance. Not necessarily it's going to get rejected, but we're going to probably have a little bit of a struggle to break higher. So pay attention to that level first, and that should bring us up to approximately those overbought levels on the RSI, which can cause a little bit of a correction or consolidation before we make higher highs, or we might pull back again, get another opportunity on this particular stock, right? So that's what we're paying attention to with AA. Once again, MACD is breaking up to the upside. RSI is heading to the upside as well. Pointing up, we broke above the EMA. We found support on the 180-day level and also on the mean level of the standard deviation. So that's AA. That's why we're paying attention to AA. The next one's going to be SNAP, SNAP. This one here, why are we paying attention to this one? We tend to, during earnings season, this is actually a really exciting time to trade, is during this part of the earnings, or this part of the quarter when we have a lot of earnings, right? Because we have a lot of these opportunities that present themselves. Either a stock rallies, significantly and hits crazy valuations, or it drops significantly after earnings, right? So with this particular one, we saw a drop, right? And we ended up dropping basically to the support level. We're not quite there yet, but let's go ahead and compare. So we're basically at this $49.50 level, which is actually a support that we had back in May. So I wouldn't be surprised to see this possibly drop all the way to this level. I wouldn't say it's going to go to 50 because we're going to be at basically -3 standard deviation. And we're currently at about -2.5, almost 3. So at this point, I'm very interested in paying attention to this particular stock, right? I think that obviously Snap is doing very, very well. It's been doing very well, very consistent, heading to the upside, holding support on the 180-day level, and then boom, earnings happened and it dropped. And I believe that this is just presenting a great opportunity for us. So from current price points to those previous levels that we were at, we're looking at approximately 33.8%, which is, fairly decent. Obviously, if you jump in right now, then we'd have about 9% risk, but you can manage your risk at about 2 or 3%, whatever you're comfortable with. However, from what I see is I believe that this is going to be a great opportunity, whether we drop down to 48.88 or we break up to the upside. Obviously, if you want to be more conservative and a little bit more risk averse, you can wait for a break above this EMA level. Even from that level to those highs that we were at before earnings, we're looking about 21%. So that's what we're paying attention to with Snap. Also, we have a critical volume profile level here at 62.50. RSI is super oversold, presenting a super good opportunity. MACD, obviously, we're starting to see a change of color here from red to orange, indicating that we're potentially curving to the upside. We haven't necessarily seen that exact break here yet to the upside, but in anticipation, we are preparing to take advantage of this particular opportunity, and that's exactly what we're paying attention to. So that's Snap for us. The next one is INTC Intel. So this one here, very similar setup to Snap. Had earnings, we had a drop, oversold on the RSI, MACD super over, curving from red to orange, not quite yet getting that indication that we are making that curve to the upside. However, it's a great time to prepare. I don't see or anticipate us dropping any lower. We very much could, but I don't think that it's, in my opinion, I don't think that that's going to be something that we're going to be seeing, just because we haven't seen even these levels since basically February, which is, telling you something, right? Intel hasn't been doing the best though. So, like I said, it's not out of the question that it can continue to drop, but I do believe that we're going to see at least a bit of a recovery. Once again, same approach as with Snap, right? Wait for the EMA if you want to be more conservative and risk averse. You want to break above that, confirm that, and then you're looking at about 9.47%. From current price points to where we were pre-earnings, we're looking about 10.52%. So with this one, it definitely probably pay for you to wait for that break above the EMA, and it would save you the drawdown if it does continue to break to the downside. So add this to your watch list, pay attention to this, and take advantage of this opportunity. We are basically approaching this -1 standard deviation, which, like I said, -2 would line up with the support level all the way down here at $43. And at that point, it's almost guaranteed, not almost guaranteed, but the probability that it's going to bounce is significantly higher. So same thing with here, -1, it's a little bit lower than it would be obviously at -2. So once again, paying attention, same approach that we're going to be doing for Snap. We got a critical volume profile level right up here at $54. That lines up with 180-day, 200-day moving averages. And that's almost at that same point. So even from here to that moving average, if we get rejected at that point, that's 7.36%. So I would take about 2 or 3% risk for 7%, potentially 10%. Definitely something worth considering. So that's what we're paying attention to with Intel, INTC. The next one's going to be Twitter, TWTR. Twitter, we have earnings. So the first thing I do want to bring to your attention is we have earnings coming up on the 26th, which is tomorrow, basically after the market. So closes, right? So that being said, let's jump into the technical side of it. So as you guys know that are on the team, or if you have been watching this channel for some time, we like to trade usually after earnings because, you know, even on positive earnings, we can see a drop in price, or on negative earnings, we can see a jump in price, right? So it's a little weird, but if you've been watching, if you've been in the markets for a while, you know that it's true, and you don't want to get caught in something just because you're biased on it, right? So we usually like to, as a team, we like to wait for after earnings to come out, see how it does, see how the market reacts, and then basically ride the trend with how the market is reacting to that particular news, or to the earnings report, right? So earnings, like I said, on the 26th after the market. Now, from a technical standpoint, we are more so on the oversold side, which is indicating positivity. And it looks like we're going to be pushing to the upside, right? From the RSI standpoint. MACD, same thing. It looks like we're starting to make that curve, potentially running to the upside as well. We had a break happen here on the EMA. And it's also lining up with a break of the 180-day and 200-day moving averages, right? So what I'm seeing here is I'm seeing a potential break above the 180-day moving average and a potential push to those previous levels, which would line up with the critical volume profile level, which is about a 7.59% profit potential. Potentially rally to this next level of resistance, which is about 13.54%. But that's really, you know, going to depend on how earnings go. So if you want to be prepared, definitely take advantage of this opportunity. And you know, even if you do jump in before earnings, have your risk predetermined, right? So if you're willing to risk 2%, have that stop loss set at 2%, so that when earnings do come out, if it does drop, you're going to be safe. And if it does rally, you're going to be in it, right? So that's an approach that you can take to it if you don't want to miss out. So that's what we're paying attention to here with Twitter. The next one that we're going to be taking a look at is going to be GOL. So GOL, this one has had a nice drop here all the way to 570. And it now looks like we're breaking above the 100, or not the 180-day, the EMA, the blue line. It looks like we're breaking above the EMA right here. And the RSI, because we were fairly oversold, it looks like we did have this this candlestick pattern that played out, and it does indicate a potential reversal. So I do anticipate this might rally, or not rally, but head to the upside and come up to this previous resistance level, which lines up with the critical volume profile level, which is about 28% profit potential. I would manage my risk here at about, you know, 3 or 4%, whatever you're comfortable with. That's what I would manage it at. Potentially 8%, you know, 9%, or probably 8%, 28 for 30% almost, risking 10. So it's about a 1-to-3 ratio. But like I said, whatever you're most comfortable with risking, make sure you have a risk to reward ratio set up though, and make sure it makes sense. But that's what I'm saying here with this one. Obviously, RSI is looking good. We are starting to head to the upside. We did get an indication on the MACD that we're starting to push to the upside as well. And so we do have an overweight target of $8 for the price target from Barclays, right? So that's also going to line up, not quite at that 1825 level, but it's going to be right up here. So even if we go off their target, that's about 25%. As you can see, this has been trading pretty horizontally. So we've seen a drop to the support, came back up, came back down to these levels right here, which is also another support level down here, came down to that level, bounced back up, came back down, bounced back up, came back down. Didn't quite bounce up because we got rejected by the 180-day moving average, but we came back down. And once again, we're getting rejected by the 180-day moving average. So returning back to this level, to this 734 level, wouldn't be a stretch to believe that. And from the technicals that are all telling us that, you know, it's a very, very strong thesis on this particular play. So that's gold. That's what we're watching with GOL. The next one we're watching is PG. PG here, not the best setup. I wouldn't say this is an A+ setup, but definitely worth a watch. We came down, found support, came back up, got rejected at the mean line, came back down, found support at the same support level, and now we're breaking up to the upside. We do have plenty of room to run here on the RSI. MACD looks like we're still heading to the upside. Earnings didn't have quite a bit of a negative impact on this, so, you know, obviously it's doing fairly well. The only thing I would say is we probably might see some resistance here at the 180-day moving average, which is about 142, and we're currently at 140. So this is one to put on your radar. It has a high probability that it's going to rally, but, you know, because we're below the 180-day, this could be a good potential short play down to this next support level down here. So no bias on this exactly, but definitely one to add to your watch list and pay attention to. So rejection potentially at 180-day levels, the moving average, or we're just going to head to the downside here, potentially come down to the support level. So as the market goes, you know, obviously stick to the EMA strategy. For those on the team, you guys know what that is. And if you guys have been paying attention to these videos, you would know that obviously stocks above the EMA, it's trending to the upside. Below the EMA, it's trending to the downside. So I would just apply that strategy to this particular stock and just have it on your watch list if you don't. Just wanted to put that one out there. The next one, it's going to be actually a better play, is Amazon, right? So this one here, once again, similarly, it's definitely a more stable company and more, you know, has more credibility than PG, but I would say this one is potentially might continue to head lower right here to the 3169 level. So potential short play here. We are below the EMA. We are below the 180-day moving average, but we are at that critical volume profile level. So we might potentially see a bounce here. And if we do see the bounce, the next level that we're going to be watching is this 3528 level or this mean level right here. So first level is going to be the mean level right up here. And that's going to be the 3457. After that is going to be 3532. If we do break below this support that we're currently at right here, we're currently testing it. If we break below it, the next level that I'm going to be watching is going to be that 3167 level. From the RSI, it does look like we still have some downside potentially. The MACD potential curve to the upside. Haven't quite seen that yet. We're still curving, but no indication of a potential move to the upside yet. So once again, pay attention to the EMA, pay attention to the support level. Whichever way we break, we're going to no bias play that side. So that's what we're watching with Amazon. The next one that we're going to be paying attention to is going to be Google, GOOG. So this is a little bit more on the longer side, longer term plays. Definitely quite a bit of opportunity to take advantage of here with Google. Google is a very stable, strong company. We do have earnings. Again, take it or consider that 26th after the market closes. MACD starting to curve to the upside. RSI has plenty of room to run. So I do anticipate a potential play here on the long side if Google performs well, or if we see positive catalyst. If we see the earnings be a positive catalyst, we're looking about 4.87, which is quite a bit for Google, considering that this stock is like almost $3,000, right? So 2.9% is quite a bit of a move, or 4.77%. On the downside, though, if we do get rejected by the 180-day moving average, we're seeing a 6.59% move to the downside. So let's see, with a move right up here, 4.55%. I'd probably have a 2% risk on something like this going into earnings. And then after earnings, I'd obviously play the momentum that's going to be heading for whichever side, right? So if it's positive, we're going to be obviously taking advantage of that and heading to the upside with the trend. But if it ends up being a negative catalyst, then we're going to obviously play the short side down to the support level down here. Like I said, MACD looks like we're starting to curve up to the upside. RSI has plenty of room to run. So I'm leaning more towards the long side, but once again, the overall market is a bit overbought. So I wouldn't be surprised if the market starts selling off. This will obviously sell off as well. So earnings and the overall market, pay attention to those two to kind of anticipate what's going to happen here with Google. The last two that we're going to talk about is going to be Pinterest, PINS. This one here came down to the support, found support here at this support level, right? So we've had the support level for quite a bit of time. Let's go ahead and zoom out. That way you guys can see how long we've had it for. Basically since the beginning of the month, not that long ago, huh? But we did have that level of support, right? So when we did have that negative news come out, so what happened here with Pinterest and PayPal is PayPal was going to be acquiring Pinterest. However, Pinterest or the deal fell through basically. So that's why when PayPal and Pinterest announced the news, we saw this rally and then the deal fell through. We came up to that basically +1 standard deviation level, which is very interesting to see how even news or current events still, respect statistics, right? Or you can see all of this pan out on statistics because we came up to this level, which tends to act as a resistance. It did act as a resistance, even though the news was completely different. The news had nothing to do with these levels, but that's what we ended up seeing. Got rejected. The deal fell through and we saw this sell-off happen. Obviously, Pinterest isn't going to go anywhere and PayPal is not going to go anywhere. And it was just the hype of the news. People got excited and then the news fell through and people started selling off. So we came down to the support that we had at the beginning of the month. And so I do find this to be an important support level. Don't think this is going to drop any lower. MACD is obviously starting to curve to the upside. RSI, we are looking very oversold. So I do anticipate this returning at least, I wouldn't say to those levels that we dropped from, but I do anticipate us returning at least to the critical volume profile level. The first level, obviously, that we're going to be paying attention to is going to be this first level of resistance, which is 54.57, giving us an 8% profit potential. And then the second level that we're going to be paying attention to is going to be the critical volume profile level. And the next resistance at 60.98. So that general area, we're looking at about between 17.3 and 20% if we come up to that level. So that's going to be the play that we're watching with Pinterest. Like I said, oversold, MACD starting to curve potentially. And that was basically what happened here. The rally because of the deal announcement and then the drop because of the deal fall through. So nothing's really changed basically, except the fact that we had, positive news and some positive news and then some negative news about the same exact deal, but otherwise nothing really changed with the two companies themselves. So that's kind of PayPal. If we haven't talked about PayPal, but we can take a look at PayPal, PYPL. So PayPal, this is kind of the situation here with PayPal. We had that negative news and we ended up dropping here, but very similar setup, right? To basically what happened. We had the rally and then we had the drop. And so that's basically what's going on with those two companies. And then the last one we're going to talk about is Shopify. So we did have earnings. The reason I wanted to mention this is because we have earnings coming up. Setup, we're not super oversold. But like I said, the earnings are coming up here on the 28th. So we have a few days, but I did want to bring it up. That way you guys add it to your watch list and pay attention to. It's not an A+ setup, but definitely one to pay attention to during the earnings season. Very important one, because if we do see a rally, we've got about 16.92%. Obviously, based on the potential, you can establish your risk. So you can have a 1-to-2 ratio, a 1-to-3 ratio, whatever you want. But definitely add it to your watch list and pay attention to it. It looks like we're potentially curving, but we do have quite a bit of potential downside here and on the MACD because we haven't seen quite a curve happen here on that blue line on the MACD. And earnings is really going to dictate kind of where this heads. So I would just wait to play this after earnings. That's what I'm going to be doing. That's my game plan with Shopify. But I do want you guys to add this to your watch list if you guys don't have this on your watch list yet. So that's going to be it, guys, for this week's Stock Talk, this week's Money Monday. Hopefully you guys found some value in this video, found some great opportunities, built out your watch list a little bit more, and are able to capitalize on these plays throughout this week. If you guys like this video, as always, smash that like button. If you're not subscribed, please subscribe. That helps the channel. I would really appreciate it. Show some love. And I'll see you guys on next week's Money Monday and next week's Stock Talk.